Hello everyone, it's Dale here with weekly trade ideas for the week starting the 22nd of October 2018. Let's start with a little recap and let's have a look at two levels which got hit since last week. The first one was intraday trade on the Australian dollar Japanese yen. This was the level based on those heavy volumes. Unfortunately, the price turned 2 pips sooner before reaching the level, and it made a significant reaction to the level 2 pips before reaching the actual level. So for that reason I discarded the level. I wasn't trading it because of the test which occurred 2 pips sooner. So there was no trade for me on the Australian dollar Japanese yen. Let's now have a look at the Canadian dollar Japanese yen. There was the second trade, the second level got hit. It was also intraday level. This level was right there based on those heavy volumes, and the reaction was very nice right there. So there was a profitable trade from this short level. Let's now have a look at the current levels, and let's start with intraday levels on the ES, which is the futures for Standard & Poor's index. As you can see, there was a pretty strong sell-off, pretty strong downtrend, and if there is a downtrend like that, I usually look for strong volume clusters within the downtrend to participate on the selling activity and to take short trades from. So the first level which I like is this one. It's based on this significant volume cluster created within the selling activity. This is called the trend setup. And I think that strong sellers who were pushing the price downwards were adding to their selling positions there, and from this place they initiated another strong selling activity. And when the price makes it back to this level again, those sellers will defend their selling positions and they'll push the price downwards again. The second short is based on volume accumulation setup. The level is right there. And those are the heavy volumes the level is based on. Those volumes got accumulated in this very long sideways price action, and the heaviest volumes within this price action were exactly right there at this level. And I think that those volumes were volumes of strong sellers who were accumulating their selling positions there in this area, and afterward they initiated this strong sell-off. So when the price makes it back to this area again, I think that those sellers will start to defend their selling positions and they'll push the price downwards again from this area. Let's now go into the New Zealand dollar, Canadian dollar. There's another intraday level which I like to trade. This is a long level right there. And this long level is based on two setups. The first one is a trend setup. I showed you in the previous example. This is a trend, and this is strong volume cluster created within the trend. And the second setup is a resistance, which became a support when the price went past it. Why I know this was a resistance? I know it because the price bounced off this area pretty aggressively right there. And this marks a resistance, and when the price goes past such a resistance, it becomes a support. So we have volume confirmation of this level, and we have resistance becoming support setup, confirmation of this long level. So currently I'm just waiting for a pullback to this level, and I think that those strong buyers who pushed the price through this strong resistance and who accumulated their volumes there will defend their positions and they'll push the price upwards again. Let's now go into New Zealand dollar, US dollar. There's another intraday level. The level is right there, and it's based on two setups. Well, actually, I could say three setups. The first setup is volume accumulation setup. Those are heavy volumes accumulated in this sideways price action right before the start of this strong buying activity. I think that those volumes were volumes of strong buyers who were accumulating their buying positions there and who initiated this buying activity, And when the price makes it back to this area, those buyers will defend their buying positions and they'll push the price upwards again. Another confirmation of this level is open drive, which means that basically the price opened and there was a strong buying activity without any price action below the open. So this is the open drive, which is a price action setup. And another confirmation of this level is the open of the day, which was right there, very close to the level. And daily open is also a strong support. So this is another confirmation of the volume-based level. If there was only the open drive and the daily open, I wouldn't really take the trade. I wouldn't really trade it, because for me to enter a trade, I need a volume confirmation. So the main reason for this level is still the volume setup, this volume accumulation setup. And additionally to that, there is the confirmation of those two price action setups. All right. Well, let's now have a look at the swing level, which I wanted to show you. It's on the Australian dollar, New Zealand dollar. And this is a pretty risky level, and I definitely won't be trading it with a full position. So let me first show you the level and then let me tell you why it is so risky. The thing I like about this level is those heavy volumes accumulated right there in this area, and those volumes were accumulated within strong sell-off. So this is basically the trend setup, and you can also see that strong support got breached. The support was right there. You can see that the price was bouncing off this general zone several times. It's not exactly the level, but it's in this general area. So we basically have support, which became a resistance when the price went past it. We have the trend setup with the volume cluster right there. And if there is more selling activity, for example, one more day, then this level is a pretty strong level to go short from. But what I find risky about this short level is if you look at the cumulative profile for this whole area, you'll see that the point of control of this area is right there. This is the point of control. Heaviest volumes in this whole area got accumulated at this price level. All right. And our potential short level is right there. If the stop loss for this trade would be, for example, at the top of this pin bar, let's say that this is the stop loss for our short trade, then it's pretty risky, because the price usually tends to test the heavy volumes. And if the price went past those volumes, it would most likely go to test the point of control. It would work as a magnet, and the price would probably start to rotate in this volume area. There would be another rotation like this one or like this one. All right. So it is pretty risky, because the point of control of this large area could work as a magnet. And for that reason, I definitely won't be trading this short with a full position. I'll be very careful about it. And if I trade it, I'll only trade it with a smaller position. All right. So those were all the levels which I wanted to show you in this video, guys. I hope you like the ideas, and I'll be looking forward to seeing you in some next video. And until then, happy trading.